Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today we're talking about my dividend trees. If you've been watching my channel, you know I use the covered call strategy, the cash secure put strategy. We have profits, and then what we do is we buy a dividend paying stock. We take a semi-passive investment strategy, for which is selling premium, and we invest that into a passive investment strategy, and that's dividend paying stocks. I have two I want to briefly touch on today, but we're going to focus largely on YMAX. So hey, look, before we get going, if you like anything you hear today, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what I'm doing is this. We are talking about YMAX and BITO. We're going to talk about both of these because now I'm buying these, I'm accumulating these. I'm going to explain why I'm buying both of them. First of all, you do need to understand YMAX was a dividend tree plant probably a couple months ago where I obtained some 1,500 shares, and we went ahead and used cover call profits. Then we went ahead and bought YMAX. YMAX used to be a monthly dividend paying stock. They have since converted to a weekly dividend paying stock. For me, it truly doesn't matter. I base my entire budget on monthly dividend income. So they pay weekly, and what I'll tell you is this. I noticed that their weekly distributions have averaged 22 cents. That times 4 would equal more than what they were paying monthly. And you can look at this. I'm not sure how they're doing it, but I'll take it because that could potentially be anywhere from 60 cents to 80 cents monthly. Now, I know that's going to move up and down based on when the single stock ETFs from YMAX, for which YMAX owns. We're going to talk about that here right now. What is YMAX? I tell you all the time, if you're going to invest in these dividend-paying stocks, you need to understand how they derive their dividend. For most of you, you might already understand that YMAX uses a single stock. They create a synthetic trade. They write call options against it, generating huge weekly and monthly dividends for their investors. And a lot of people love them because they pay very large dividends. I mean, if you're a closed-end fund investor like I was for many, many years, 9 cents per share was a good deal. Now you're getting 90 cents a share with some of these. And recently, Misty, which is a YMAX dividend paying stock from YMAX, which uses MicroStrategies as the stock to generate the income, $4.10 per share. These are incredible returns and they're very enticing. They are tempting because what you need to understand is that when they pay those large dividends, Misty was trading for 30 plus. And of course, when they distribute the $4 dividend, next thing you know, it's trading for 26x. Now, for some, you have no problems with that. Others, that's just going to wreck your world. Your total plus and minus for this stock could show a loss. What if you're buying this Misty at 30, you get that dividend, it's fat, you don't reinvest it, and you go ahead and pay the bills? You now are down $4 on Misty, and you're watching that all month, and you're hoping it gets back to the price, and it may not. So what I love about YMAX, that they use a collection of some 20 of YMAX single stock ETFs to derive its dividend. If you go to YMAX's webpage and you type in YMAX, you will see that it invests in all of the single stock ETFs. And basically when they distribute their dividend, YMAX then distributes its dividend. This is what they invest in. And this is what's very important to understand. I tell you all the time, you need to understand what ETF or closed-end fund invests in, because then you'll understand when they distribute the dividend, depending how big that dividend is, if there's NAV erosion or where the share price will fall much further than you want it to, you have to understand why it's doing that. You can't get a $1 dividend on an $18 stock and not understand that when it falls to 17, it's because of that dividend. So looking at YMAX, you can see what it invests in. This is beautiful because I love the diversification of it. If you can't see this because this is rather small, I'm going to go ahead and mention some of the single stock funds that YMAX is invested in. And right off the bat, you can see AMD, Amazon, Apple, Baba, Coinbase. Then we even have Meta, which is Facebook. We have Alphabet, which is Google. Then you have JP Morgan Chase. You have Misty, which is MicroStrategies. You have NVDY, which is NVIDIA. Then you have PYPY, which is PayPal. And you have others. Now, I just went through a bunch here. It looks like they have potentially some 30 investments. One thing I notice is that they are investing in BITO. Now, BITO is not a YMAX fund. It is a ProShares ETF that tries to mimic the price of Bitcoin using Bitcoin futures. It does not invest in Bitcoin directly. I'm going to talk about that here in a moment. With YMAX, why I'm investing in YMAX is because of this diversification. Look at all those great stocks. And when those great stocks perform like this market is, we are in a bull market. These individual YMAX funds are going to generate decent monthly returns. So that means YMAX is going to. So with that said, I want you to always understand what your dividend paying stock is investing in. You can go to YMAX's website, type in YMAX, and you can see what their distributions are. They're coming in and around 22 cents a week. They're now weekly. That is not a bad shake right there. To get 22 cents per share per week, like I said, that potentially could be 60 to 70 to 80 cents per month. And with the consistency of having such a diversified portfolio kicking out nice dividends, because we're in a bull market and all those great stocks I mentioned are moving sideways to higher. And again, remember, they're selling call options against them. So the market could actually fall and still make money. Options are incredible, but they're also incredibly volatile. Do understand what YMAX is before you put any money to risk. I'm going to leave you with this on YMAX. I now have 3,000 shares of YMAX, and every time I get a covered call premium in my taxable account, I keep adding more and more shares to YMAX. Ultimately, I believe YMAX could be the standout YMAX ETF that is steady Eddie, and that's really all we want in our dividend-paying stocks. Hey, it's great to collect a $4 dividend for Misty, and sometimes it's a kick in the nads when you only get like a 30-cent dividend from one of the others. But again, lower your expectations. Look for a diversified portfolio. To me, YMAX is very diversified with some 30 investments inside. You have great companies that are trading sideways to higher, so every single month there's going to be a great opportunity for them to pay that weekly dividend. And to me, the dividend is a very low bar of achievement. 22 cents a week with all of those dividend paying stocks filling up YMAX and then YMAX distributing it to their investors. See, this is what I like. They have the underlyings inside. It's not a synthetic trade where they synthetically create a position in those ETFs and then trade options against it, for which the NAV would easily be eroded. When you look at what they're holding, you could clearly see they actually own the shares. So they own the underlying. This is why they've been able to maintain their share price of in and around $17 to $20. And I like that because that's a nice, steady Eddie dividend paying stock that I could just keep buying with my covered call and cash secure put profits. And what I'm going to say before we get to BITO here is just that. You learn to write covered calls, which creates cash flow. And to be honest with you, some have said it's free cash flow. You know, you own some shares and you write a covered call. You literally printed the premium money. That premium money becomes a profit for which you did not have. Then you buy a dividend paying stock. In my case, I'm buying YMAX. It's as if this YMAX position has been bought for free. Now, I'm not going to say that because I work hard for my covered call premiums, but I'll tell you, do you get it? Do you get how we take covered call profits and buy dividend paying stocks and we're doing it with profit? Well, that's how I do it. I call it my dividend tree plant, and we plant that dividend tree every single week, every single month. It's going to bear a cash dividend fruit. And oh, by the way, that cash dividend fruit is going to buy BITO. Now, BITO is an ETF from ProShares. And what it tries to do is mimic the price movement of Bitcoin through an ETF. And you can see on its website here, this is the ProShares website for BITO. It actually tells you right there, it does not invest in Bitcoin. It invests in futures for Bitcoin, and it tries to mimic the movement of it. This is ProShares. ProShares have been around forever and very reliable. I love using ProShares ETFs. Now, what I'll tell you about this fund is this. I've been watching it for a long time. First of all, I didn't know that it had a dividend. I looked at it for cover call writing. To me, this is what I call a 1x ETF to Bitcoin. And you can write covered calls on BITO and collect about 3% per month. And that's beautiful. What I didn't realize is that BITO has a tremendous dividend where they pay over $1 per month. And you can see that it does fall. I will tell you this, if you overlay a Bitcoin chart here, you will see that Bitcoin has done the same thing. So this isn't necessarily NAV erosion here. It's Bitcoin moving. And you can see we're getting a little bit of stable action here where it will trade between 19 on the high, and that's where it's at now because Bitcoin is trading in and around 67K, to as low as 15X. I don't mind that. I'm holding it for the dividend, and if I'm going to write some covered calls, that's great. Why am I buying BITO? Well, I do like that $1 dividend, and I'm going to own 1,000 shares, so that'll be pretty darn sweet to be collecting $1,000 and then take that $1,000 and go ahead and buy the current dividend tree I'm planning. And that could be another YMAX trade, or that could be any number of the dividend-paying stocks that I buy. But what I'm going to do with this, I'm going to pick deep out of the money strikes for which I'm going to write cover calls on. So what I'm doing is this. I'm writing cover calls and selling cash secured puts. We're generating a premium profit. We take that premium profit and we're buying equal shares of BITO. I did this today. Had $500 in a premium profit, went ahead and bought 42 shares of BITO. This is how we do it. We are dedicated, determined, diligent to have 1,000 shares of BITO. So that's going to happen probably within this month. And along the way, when I get 100 plus shares, I'm going to go ahead and write some deep out of the money covered calls where it's likely my shares will not be taken. And I don't care what the premium is, even if it's a mere 20 cents, 30 cents, 40 cents. Well, that's money I didn't have. I was going to own this dividend paying stock anyway. BITO is one of those ETFs for which you could actually buy and write 3% monthly covered calls. And unbelievably, it kicks down a huge $1 dividend on the share price. You could see it at 19 bucks. It paid $1 last month, $1.20 the month before, $1.40 the month before that. And again, we do have NAV erosion. This does not own Bitcoin. This is using Bitcoin futures to mimic the movement in Bitcoin. So it's a synthetic trade too. Somehow, because it mimics Bitcoin, it finds that it does not have such NAV erosion. And I'll tell you what, if I had to guess, Bitcoin will be moving to 70 plus K in a few months, if not the beginning of next year. You have to understand what Bitcoin is to understand that. Bitcoin is a store of equity. Only 25% of all Bitcoin is being traded or hasn't been mined yet. The other 75% is literally being held by ETFs or held by investors or lost. Like lost in wallets that people can never get back. This is why MicroStrategies has come up with a fabulous business model. They buy Bitcoin and hold Bitcoin. That's all MicroStrategies does. Yeah, they own a little software company where I think revenues was $10 million. They own over $15 billion in Bitcoin. That's what they do. MicroStrategies buys Bitcoin. And in fact, I'll tell you what, if you look at their last 3 debt offerings, what do? Read it. When they offered $1 billion, they took $750 million and bought Bitcoin. And then when they did debt offering number 2, they did the same thing, paid back some of their debt from the first. And they just recently did another debt offering where they took $750 million and they bought more Bitcoin. And they're paying down the debts from the prior offerings. And now the stock is incredibly rocking from its 10-for-1 split, for which I think it split at 1,200 to now 120. It has rocketed to now 220 on the idea that Wall Street believes Bitcoin will go above 70,000. And I'll tell you what, I'm not saying this, but a lot of people are saying mid-year Bitcoin is going to be $125,000 a coin. And look, it's because it's a storage of equity. And you have all these hands in the pot that needs it, that wants it, and they are investing in it. So Bitcoin moves and momentum swings, and all you have to do is stay patient. It'll come back. It'll definitely come back, and that's where we get involved. I'm getting involved in BITO now with Bitcoin at 67,000 just because I'm starting a dividend tree. Otherwise, I would wait for this to peel back a little bit. Hey, sometimes you literally have to plant your flag, and that's what I'm doing with YMAX and BITO. Hey, look, if you like anything you hear today, bang that like button and go to cptdashboard.com and join my membership. My members get all of these trades, and in fact, they can see all of my current dividend stocks, and they can see how many shares I have, and I keep updating it, and every single trade I do, they see when I buy a dividend paying stock and which one, because I buy a lot of them. We are going to be diversified. We are going to generate passive monthly income. cptdashboard.com, click upgraded dashboard, get your 1 free month offer. Would love to welcome you aboard. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.